Thank you so much for coming on the LFC potty.
Hi, Molly. It's great to be here. Thanks for inviting me.
Absolutely. All right. Well, you say at 43 you were broke. What got you into that position and what's changed since?
Well, I think sadly it's a position that many women find themselves in. I split up from my husband of 17 years, and I did work, but I spent most of my time looking after my kids. And I had also, what compounded it for me was that I'd moved to another country. So I'd left everything behind. I'd left the job that I had behind, and I'd moved to Singapore. And I really wasn't in a great place financially or also in my career in this country. And when I had no choice but to end the relationship, I really was starting again completely from scratch. And that was compounded because in Singapore I had no legal rights. I didn't have a visa where I could actually go and get a job. So it was really scary and it was really tricky. And the saddest thing is that there are so many women that happens to. So that's what I really want to focus on is don't get yourself in that situation. And if you are in that situation, you can get yourself out of it.
Yes, because I think, there will be women listening to this who do feel that sense of trapped and that they don't have another option right now. So I guess speaking to them, and obviously with Ladies Finance Club, we do a lot of financial literacy. What's a starting point for those women who are like, do you have any, do you have any kind of
Yeah,
insights to share?
I have a really great phrase. A man is not a financial plan.
Hashtag man is not a financial
Yeah.
plan.
You go into these relationships and everything is brilliant and you think that love and happiness will last forever, but it doesn't. And it's so important. It's so important to support your partner in your relationship and take care of your children, but you must take care of yourself as well. Don't give everything up when you're in a relationship. Take care of yourself and make sure, even when we look at women raising their kids, it's actually a fairly small part of their financial life. So it's important not to give up everything to raise your kids because once they're grown up, you've got many years, many, many years where you still need to look after yourself.
Absolutely. And this is why we are massive advocates of having an emergency fund always in your name that you have access to, and also setting yourself up, financially with investing. So how did you get started on your investing journey?
When I started to build a business in Singapore, I was a bit of a scrappy entrepreneur, and I ran some training courses, and I did well. And I started to manage to be able to save a little bit. And I just had a dabble at investing. And this is when a message came through from eToro. I knew nothing about it. I had a $25 voucher and I popped that in. And I was really surprised at the results. And that just got me interested. It just got me interested, thinking, wow, this is a lot, that you get better returns than putting this in your bank. So that's what got me interested by accident.
Do you remember what your first investment was?
Facebook. I invested $25 in Facebook. And then I forgot about it. And about 6 months later, I think my $25 had turned into something like $48. Like, whoa, hang on a minute. Is this for real? And I took it out and yeah, oh wow, it is for real. And I put it back in. And then I think this is a really important message for women as well, and we can dig deeper into this. Number one, you don't need to know much. People think that they need to know everything. There's only a very small amount of rules that you need to get started, and it's simple. And start with small amounts. Like many women here, I love my clothes, I love my shoes, I love my champagne with my friends, I love my holidays. But I would just invest small amounts. So I'm talking about $25. And I had a really interesting strategy as well, which might resonate with some of your audience. I'd go out shopping and sometimes I'd think, really nice dress, put it on, and I'd think, no, actually. And then I'd put it back and I'd get home and think, I was about to spend $200 on a dress. And I didn't. So what I'm going to do now is I'm going to take that $200 and I'm going to get some shares with it. And what I would do as well, I might buy, and I did, I got shares in Tiffany and Louis Vuitton, and I've got Estee Lauder. So I've got shares of things that I'm interested in as a woman as well. And what's great about having shares in things that you're interested in, rather than a barrel of oil, is that you want to read about them. So I found myself starting, having a coffee on a Sunday morning, flipping to the back pages of the newspapers and reading about things that I was interested in. And I think it's really important to invest in things that I was interested in and that I spent my money on as well.
Yeah, absolutely. I love anything to do with like clean energy, and I'm happy to read about it as well. And that's such a good point to actually be interested in the things that you're investing in. And when you said, and I know like I love that you say start small, because I get women saying, oh my God, I'm so nervous. I've got to invest $5,000, $10,000. And I'm like, start with 50, start with $1. Like, you don't have to start with these huge amounts. That is very much a myth that you need lots of money and you need to be investing with lots of money.
But you used to have to do that. Platforms like eToro have really changed that. And it used to also be quite complicated to start. So you used to have to set up additional accounts to support your trading and have minimum balances. And you don't have to do that anymore. And it makes it so much more accessible for everyone, which is brilliant.
Yeah. And you did mention as well, like, you don't need to know everything. You just need to know a couple of those foundations. What would you say are a couple of those foundations?
You have to understand opening and closing a position, not necessarily buying and selling a position. So there's a little bit there that people have to understand about when you open it and when you close it. And I think it's also important to understand, depending on your platform, something called leverage. And leverage is where you double or triple or quadruple your investments and with more risk. And you can just do some simple reading about this. And as you start, don't leverage, don't sell, start small. And there's another thing that people might want to understand a little bit more about, which is stopping a loss, minimizing the amount that you will actually lose. So the difference between selling and closing, making sure that you don't leverage, and also you can set a stop loss. So if you worry about losing it all overnight, because most of the positions that we open are in the States, they don't have to be. So that's it, three things. And I didn't know what those three things were when I started. I do now, but I don't know. I didn't know but if I had to sit somebody down and they said to me, Sharon, tell us about trading, those are the three things that I would explain to them.
Yeah. And then I guess there's the other things around diversification, knowing what you're buying, make sure you're in it for the long term. It's not about getting rich overnight.
Well, that's interesting because some people might be in it for the short term. They might want to do day trading, but you have to understand the difference. And you also have to clearly set your risk appetite, or to understand your risk appetite, and to think about how long you are trading for. There's nothing wrong with opening a trade for 3 days and then closing it and making a small amount of money, but that's trading. That's not investing.
Yes.
And there's a difference.
Yeah. And I would say most of our listeners are investors, not traders.
Yeah.
Or the ones who have tried to be a trader for like a day or two. It hasn't gone very well. But we're very much here all about like that long-term investing over time.
100%. You've got to view it the same way as walking into a casino and be prepared. Be prepared to lose.
Yeah. How has your life changed since you've started investing? Has it allowed you to do certain things, or has it allowed you to have extra cash flow in your life?
Oh, not so much. It's more about the security, because having to rebuild my life and my career from my mid-40s and start again with a pot of nothing. I do now own my home, and I didn't think that I would ever be able to own a home again. And I've got a really good retirement fund. I rebuilt my life with a good career. So I'm a change manager, mainly in financial services. But I did think that I would have to be doing that into my 70s, or I would have to be working in some ways into my 70s. If I wanted to, I could retire now, Molly. I'd have to downsize, but I could I could retire now. I've got super, I've got investments, I've got my emergency funds, I've got my house and stuff. So I can't believe that in, what is that, just sort of 10 years, I've actually put myself into a better financial position than I was in when I was with my husband.
Wow. How much of that is through investing, or is it through investing, but also like creating new financial behaviors, new habits?
Creating the financial behaviors, also massively hustling. So I have a side hustle as well, and I'm always on the lookout of where you can earn some extra funds. And that comes from a place of insecurity. It comes from a place of protecting yourself, never wanting to be in that situation again, where I did stand in a supermarket and go, strawberries, raspberries, I can't have both. Which one? What do I want? Having to stand in a supermarket queue and count the pennies so that I could buy my groceries. I never ever want to be in that situation again. So now being in a position where one of your mates needs a loan, to be the person that says, no problem, I got your back, babe, I can help you out here, to be in that position, to be able to buy a car for cash. There's other interesting changes in financial behavior as well. When you pay for something outright, like a car for cash, you have a very different mindset than if you buy it on credit. So in my previous life, I had very fancy cars. So we had a Lexus and a Porsche, and the money went out every month, and I never thought about owning that vehicle. When you actually take cash and you pay for something like that, and you think about, do I really want to buy a 200k car? I can do that, but I would take every single penny out of this investment portfolio and put it on a car. No, 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 no. I'm going to have a little Mazda. You know? So there are also very different mindsets that I have. Things like absolutely never paying credit card interest, paying my credit card bill off at the end of every month. And you change this mindset when you approach it differently. When you're swimming in debt, and you're just paying credit card interest, you just ignore it, and you just go, oh, that's what it cost, that's what it cost. When you've chosen to buy things like an expensive car and the money comes in, goes out, like you sort of brush it under the carpet. When you budget and you start to look at it from a holistic level and you start to look at the whole thing, no way am I paying $500 credit card interest this month. No way am I going to be wasting all of that money on a really expensive car. So I have a big financial shift as well.
Yeah. And for those who are listening and they are in their 40s and 50s and maybe they took off a huge amount of time, or maybe they haven't worked for a while because they have been raising a family, and they look at their super balance and it is quite low or even empty. We know that 1 in 4 Aussies are retiring with women are retiring with no super balance. What kind of, I guess, advice would you have for them?
Well, super balance is important to prioritize that as your savings because you get tax incentives there. So you're actually getting some free money from the government. So if you're looking at, should I invest in my own share portfolio or should I top up my super balance? You would always top up your super balance first. I would say do a little bit on the side to get you interested as well and to shift your financial mindset. But so many women, even those who have been in a career, who've been to university and they've got a degree in something, when they get to their mid 40s or even later, they decide to change their mind and they decide to reinvent their career and do something different. And it's hard, but it's not impossible. It's not impossible. And any career that you do, any career, there are ways to make more out of it, to do things like start a podcast or become an influencer in that. If you're in a position where you're not, for whatever reason, set up really well for your future success, dig deep and find ways to make extra money on the side. You know what? If I had to, I'd go and work in a bar so that I had some money to invest to start a portfolio. And I've had cleaning jobs, I've had bar jobs, I've waitressed. So if you want to use that extra money to buy shoes and champagne, that's fantastic. You do that, but it's important that you take care of your future finances as well. And sometimes that means working 10 hours a day or finding ways to boost your income so that you can start this journey. Starting that journey as well, Molly, might be to save some money so that you can educate yourself in other things. So maybe you need to do some courses, maybe you need to go back and study, do what you need to
Yeah.
take responsibility for it.
Yeah, and get started. It's just never too late because sometimes we just hear that. It'll be like, I even had a lady who was in her 40s and she's like, oh, it's too late to start investing. And I'm like, it is absolutely not too late.
No,
That's
no, not at
crazy.
all.
But then I've had also people in their 30s and 20s say the same thing as well. Oh, it's too late to get
No.
started. I'm like, what planet are you on? Absolutely not. As far as like keeping informed about the markets, new investment opportunities, where do you kind of start with sourcing that information?
Well, it's interesting because if you start to read some of the financial reports, they are very complicated and it can put you off. Okay, so let's explain there are two ways of tracking or looking at your investments. You have a technical analysis, and for people who are new, this is probably not your best bet. And a technical analysis would generally look at previous performances, it would look at the balance sheets of the organization, and you'd have to dig in and understand valuations, price to earnings ratios. And what happens for somebody that's new, straight away they'll glaze over and they'll go, I don't understand that, this isn't for me. Okay, let's look at another way of doing it, and this is what I do. So what I just spoke about there, understanding all of the technicalities, that is the technical analysis. I do more of what's called a fundamental analysis. I look at, what's this company doing? What have they started to do that's really great? What are they doing that maybe now puts them at risk? And this is where we can look at organizations where we use the products. For example, if you work in any corporate organization, you probably use Microsoft products. So you'll understand how important Microsoft is in business. If you've got kids, your kids might also have an Xbox. Did you know that Xbox is a Microsoft product? So if this is around you all the time, do you have an iPhone? Do you like Apple? Do you like their products? Do you like their customer service? So I invest, and where you're talking about sustainability as well, if this is important to you, are you a vegan? Maybe you want to invest in plant-based meats. Look at what you love and which companies are doing great things. Now, I follow the news on LinkedIn, and I find on LinkedIn, the reason that I like LinkedIn is, first of all, I'm on there all the time for my job anyway, but everything is at a higher level, less technical. And the other thing that I love is LinkedIn will also have comments from customers and from employees as well. And for me, the future of an organization is based on its employees and its leaders. When we look at the technical analysis, people can make the numbers say anything they want. So anybody who's worked in an organization and understanding the balance sheets, and I won't start to get into all of those technical terms again, but you can make the numbers say whatever you like. Is a company not doing very well because they're investing for their future? Have they just got a new building? Are they heavily investing in the workforce for the future? So I actually look at the sentiment of an organization, and I do go quite a lot on the gut feel. And this is again why it's important for me to follow things that I'm interested in. So when it pops up, I'm like, oh, let me just read about, what's happening at Netflix. What's the new movies? What are Netflix bringing on that are going to get more subscribers
Yeah.
on there?
50 Christmas movies. All right.
Yeah.
Great. And are you seeing at all within yourself or just in the industry this trend towards ESG investing? So for those listening, ESG, environmental, social governance, and it's like investing with your values. So also kind of sometimes people call it ethical or impact investing.
Yeah. It's really tricky because if you Googled and you have a look for ESG companies, then some of the big companies like Apple and Microsoft will actually come up as being ESG. What does that mean? It's important that you understand what that means for you. So instead of you going and finding your favorite ESG companies, what you can do is you can invest in a collection of companies that somebody else has already set up, and they've said, look, we found 20 ESG companies, you invest in them. For me, some of the companies on that list may not be what I would call ethical customers. I have conversations with people who will go, Apple's not an ethical company. So it's important that you research what that means. Is it the type of labor that they use? Is it the raw materials that they use? The other thing is that ESG investing may not actually be that profitable. So do you want to put your conscience before your profits? And that's something to think about as well. For me, with charitable donations as well, people say, I'm going to give loads of my money to charity. The more money that I can make, the more that I can give to charity. So for me, I concentrate on making more money, and then I've got more money to decide what I want to do with it, which might be to invest in an angel startup of a woman who is making clothes from responsibly sourced materials. So you can do it in lots of different ways. I choose to maximize my profit and then choose to invest in other ways, like taking a flight and paying carbon credits or something like that. So people do that, but I don't think that they often really understand what that means. So you should have a look at it in a little bit more detail.
Yes, and I know absolutely with ESG investing, there is no criteria. You've got to really make sure you look at that fund or look at that company and make sure it matches with your values as well. I guess to wrap up then, so where do we see Sharon in the future?
I love working with eToro. I love the way that it's simple. I love the way that you can get started with almost nothing. And one of the things that people should consider when they're deciding where to invest are fees. So eToro also has low fees, so you're not going to lose a large amount of your investment paying those fees.
And you're a not a copy trader. Are you a copy trader?
I'm a popular investor.
Oh, sorry. So you're a popular investor. So, and just for those wondering, what is a popular investor?
So a popular investor is somebody if you're thinking, oh, I like what you're saying, Sharon. I like the idea of having Louis Vuitton and Estée Lauder and Hermes and Netflix and Microsoft in my portfolio. What you can do is you can say, I'll have some of what she's having. So you can actually go and you can put $500, almost like backing a horse. Wherever the horse comes in the race, you get paid out. So you can actually copy me. So you can go on and you can find my little smiley face on eToro. It's just Sharon Connolly, and you can either follow me, so that means that you're not actually putting any money in there, but you're just seeing, when does Sharon buy, when does she sell, what's she doing, and I post lots of comments in there. Or you can actually track me, so you would put $1,000 and that would open investments exactly in the same proportion as me. So I am an eToro popular investor. There's hardly any women, which is really sad, Molly. I think there's only I'm the top one in Australia. I might be the only one in Australia, but actually globally, there's only about 5 of us at my level, which is really sad. So get on there, copy me, and aim to be a popular investor. If ESG is your thing, start portfolios in that and get people to copy you. You get paid for that. So I will continue to invest towards my $1 million in eToro. I do have investments in other places as well. eToro's recently started to do Australian stocks, which is fantastic. So I will do that. I will continue hustling, my side hustle. And it is important to say as well, I will massively continue enjoying my life, buying shoes, dresses, and champagne.
Awesome. Well, thank you so much, Sharon, for coming on, and all the best for the future.
Thank you. It's a pleasure to be here, Molly.